So like when anyone's forming their opinion about, how they get a loan, most adults have had the experience of getting a mortgage or a student loan or something as simple as a credit card or an auto loan. That process is terribly complicated. Anybody who's gotten a mortgage in the last decade, has had the experience of having to come up with all this paperwork and having to get everything organized and basically go down to the bank branch or to their broker and say, here's all this stuff, and then there's this back and forth process that ensues. So inherently, people have this view of lending that it's terribly complicated. The component pieces that we look at that drive risk for us basically are credit score of the individual owner, which is a function of any kind of lending decision. Your time in business, which has a great deal to do with your continuity. A business that started 6 months ago or a year ago is inherently much riskier than the one that's been around 2 or 3 years or 10 years. And then finally, your annual revenue. So as you say, it's a very competitive market that we're in right now. The main value add that I think we do better than anyone else at this point in time is we are looking to reach out to our users within 30 seconds of application. Someone comes to our website, they complete an application, they give us their basic information. We are then reaching out to them oftentimes while they're still on our website. So business owner comes to our site, they need $100,000 within a week for a seasonal inventory spike that they might not have anticipated. They're going to be able to come to us, take a very basic application, provide us 90 days worth of bank data, some additional clarifying information. We're having a conversation with them almost real time right now. It's hard to find that anywhere else, almost in any other service on the internet. So we know that efficiency, speed of being able to process these applications is very, very key to our end users. We found that that's a main priority, folks. We ask everybody on the initial call, not about their level of urgency. We don't want to lend to people who are desperate. Again, we like to lend to people who can use our money, not people who need our money, right? That's an example of a consumer loan. A lot of those people need the money. With us, we're looking to provide value to the businesses that we give money to. So one thing that we found that we do particularly well is we get people on the phone. We have good quality conversations with them. We educate them on how these loans work and the upside and the value. And then, of course, we explain to them, as long as they pay our loan back on time, which obviously we hope they do, we're able to provide them, greater benefit in the future, which can be larger loans, it can be longer terms, something as simple as lower rates. So we like to really reward the folks who pay back on time. That's really the whole key to our business model, is retaining good quality users. So the technology piece of the business is really the sexiest component of our business. So 5 years ago, you didn't have people that all had online bank accounts, that didn't have access to their business bank information. To get someone's credit score required you file paperwork and submit their signature to something. All of this information now is digital and readily available, which really is a major tailwind for our business. So when someone comes to SnapCap, they apply, they give us their personal information. We're not collecting social security numbers and tax IDs and all this intrusive information on our website. We think it's inappropriate. A lot of our competitors do. We don't want you to feel like you have to give all that up front. Give us some of your basic information, all very high level stuff. We'll call you, explain our product. You can then volunteer that information. Once I have your tax ID number, I can do a LexisNexis search. I can see if your business is in good standing with the Secretary of State, if you pay taxes, if there's anything major and derogatory that might prevent us from putting on a loan. If you've got, if you provide us your Social Security number, we've got a pretty good window into your past and who you are as a borrower. Are you totally maxed out with all of your trade lines? Are you a bankruptcy risk? Are you letting your mortgage payments go? All that sort of characteristic stuff defines kind of who you are as a borrower and also gives us insights into your capacity as a borrower. I probably don't want to be giving someone a $100,000 loan who's maxed out every credit card that they have and is going negative in their bank account. That's not a good fit for us. So once we've solved the credit piece, you're able then to go into your online bank account to Wells Fargo or Chase or TD, all of these great money center banks that have created online access. So you can literally go into your phone, download some statements, and forward them from your iPhone or your smartphone directly over to us. Once we've got those 3 months of statements, we're able to look back into that 90 days of activity. And from 90 days of bank data, we can extrapolate so much information about your business. Because again, we're not making 5 and 10-year loans. These are 6, 9, 12, 18-month loans in some cases. We keep them pretty short terms. So we make money in a few different ways right now at SnapCap. Most of the money that we've made because of, our capital structure is a little bit more modest now that we've only started in the last couple of years. So up until this point in time, we've been an originator where we're compiling applications, we're doing some crude underwriting on our end, we're doing some basic credit filtering, then we're more or less selling those loans to a handful of partners. What we found through this process is that we're now beginning to build a balance sheet where we're taking direct participation into these loans, and we're participating now in some of the upside. A lot of the value in this business is being able to provide not 1, but 2 or 3 loans to a good borrower. So each time I go out and acquire a customer, I've got that cost per acquisition that I have to eat on every single person. If I'm renewing that same user, I've eliminated that cost. I'm then just looking to retain them. It's almost like anything. So, but what we think we've solved is the ability to acquire users online at a very, very attractive price point relative to our competitors. It's not because we're able to spend money more efficiently, that's part of it, but we're also interfacing with the user in a real-time environment that makes them feel valuable.